So, Jonathan, nice to have you here today. I've been looking forward to having this discussion here because we're two finance guys, and finance and financing is not something in the dirt world that a lot of people know really in depth. They maybe are familiar with the ideas and the 30,000 feet, and yeah, you just signed a lease, but not the real stuff. So glad to have you here.
Raj, thanks for inviting me, man. We were talking before the show, and there's so many similarities. This is just fun for me. That's all this is. This is fun.
Awesome, and that's when you get the best conversations when it's just fun, right?
Yeah, yeah, and
So.
and and like one of the things when you're talking about like blue collar, talking about dirt works, there's a lot of misconceptions about financing.
Mhm.
A lot of people don't know where to go, how to approach it, what program. The biggest thing I see is what program do I need to fit what goal I'm trying to accomplish.
Mhm.
And people don't understand with financing, if it doesn't match, right, you're going to get yourself in trouble. And it doesn't matter what the rate is, right? Like if I use a line of credit that I have at interest only at 10% to buy a house, I'm going to be in trouble.
Mhm.
So you always have to make sure the program matches. And there's very few places, if any, that actually have all the programs and the right knowledge behind it.
Mhm. Well, yeah, we were just talking about like even 0%, 1.9, 2.9. And those are big enticing factors for a lot of buyers when they're buying new machinery because of what the perceived benefits are. But we were talking about it, and it's pretty much a scam, right? It's not pretty much; is they pay for that buy down. There's no such
Yeah.
thing as free money, right?
Yeah.
So these guys are thinking they're getting a deal, but really you're just paying for it, and it's just amortized over it, anyways, right? So there's no such thing as free money. But again, people don't know this, right?
Or higher equipment costs, right? So they always find a way to hide the profit,
Hmm.
whether it's in the financing or it's in the machine. You're right. People do it both ways. And so as an independent, marketplace, kind of like exactly how you run your stuff, care about the end user. We care about the client. And if the client grows and the client has a great experience, then they're going to come back to you and they're going to recommend a whole bunch of people to you. And that's really the only way I ever want to do business because you're building relationships and you're seeing people win. Like, here's the thing, when you help that contractor get that piece of machinery much cheaper and a higher quality, and when I help him finance it, and then I help him maybe set up invoice factoring and he grows and he doubles up, guess what? Now his family's more secure. But more importantly, every single person on his team, okay, is more secure. He's probably adding more people to his team. And the community that he serves is going to benefit because he's doing more of the work. And that has a trickle down effect that people don't ever realize. Right. And so, like, one of the things is, yes, I'm a finance guy, but I'm also an operator. And being an operator, I've ran and I run multiple different businesses. One's a factoring company, one's a business financing marketplace, and believe it or not, one is actually in wound care,
Hmm.
and and that's the worst one, right? In the medical space. So
Yeah.
I know how to operate a business, and so when you do right by a small business owner, they impact the community, and that actually has that trickle down effect. Like I said, and that's really why I do what I do, and I'm sure that's probably the same reason that you do what you do.
Absolutely. So that's we were just talking about blitzscaling and like Reid Hoffman's book, and it's when you do something like how we're trying to do with the industry, and that's take something that's typically $10 and now make it the new norm for the exact same product to make it $3. That trickle down effect of that $7 now in every one of those contractors' pockets. Yeah, even if we made $1 billion, imagine how much the trickle down effect is now that we've taken that product and changed that price to all those contractors that are now going to reinvest that money in the economy, whether it be buying more machinery or upgrading their house or whatever it may be, is exponentially more, right?
It's
So
not
I
even
get
close.
that. Yeah,
It's not even close because how many
right.
units would you have to move to make that money? And then you
That's what I'm
multiply
saying.
that little amount by the $7 they just saved and they're adding somewhere else. It's substantial. right? And that's capitalism at its finest.
right? So like we're talking about that with like Netflix and Blockbuster. So okay, yeah, Blockbuster should be like $10 and probably the late fees is where they made all their money. But now it's nothing, compared to
Yeah.
that. So that's a small amount, $10. But we're talking about machinery, hundreds and hundreds of $1,000s. Like we're talking to somebody out in the States right now about doing a large independent rental purchase of, they're looking to buy $250 million worth of machinery. Now imagine now we save them, like how we are able to do at least like 50% margin on that stuff for the most part. That's $125 million,
Yeah.
right? So like
Makes
just
a difference.
that
Yep.
is a significant amount, right? So what that
Yeah.
gets done is, they're probably going to double the size of the fleet that they expected that they could have bought, as opposed to, going the regular routes, right?
Yeah, absolutely. And it's kind of funny how we were connected. We had 2 or 3 overlapping clients, and they
Mm-hmm.
introduced us. I set those clients up with factoring so they don't have to wait 30, 60, 90 days to get paid.
Mm-hmm.
One of them was on a run rate, for the year to do about 500,000, which,
Mm-hmm.
he's 2 years in, 3 years in, that he's doing great. Since I set him up with that, he's on a pace to do 1.2 million. And I bet you next year it'll probably be 2.4 million. Why?
I agree
Because
with
he's
you.
not waiting to get paid.
Mm-hmm.
And that's one of the biggest issues that we see in blue collar trades. When you're net 30, net 60, net 90, right? For every dollar that you're waiting on, that's a dollar that can't go to a different job that you're ready to start, right? And then the other problem is people get the wrong program, like we talked about earlier.
Mm-hmm.
If you get a line of credit to bridge that gap and you grow, you're going to max out that line of credit. And now you have a monthly payment or weekly payment that is taking away from your cash flow instead of setting it up like a pay when paid program, because that's what net 30 is. You're getting paid when they get paid for the most part.
The problem for contractors, like from a banker's perspective that I've seen is the fact that their receivables are lienable. So they don't treat it, the bank doesn't treat it like a regular line of credit, which is okay, 75% of your receivables that are less than 90 days, right? That's the usual rule of thumb. And then that's how they judge the size of your line of credit. With a contracting company, they're just going to take your top line. So you do 2 million or 500,000, 10%, 10,
Yep.
15% max. And then that's where you're at. So that's never enough. And because again, it's not actually margining against those receivables, which is, lending against them. It's just giving you this kind of like, here, this is how much we'll trust
Yep.
you based on your top line. So that's not the same way. That's not going to be effective if you're going to go, let's say you bid on a $10 million project, right? And you have a
Yeah, we did.
$500,000 line of credit.
We did. Yeah. And here's
So
the other
that's when
thing.
you have to look at other options, right?
Yeah. And the banks aren't flexible, right? So if you open up a
Not at
line of
all.
credit, if you're sitting at 5 million and you get a $500,000 line of credit, and you're making all your payments, everything's good, and you grow, and now you're at 7 million or 10 million, and then you get that big contract that's maybe 3 or 4 million. Well, guess what? You can send them that contract all day long. They're not going to increase that limit, right? Where if you have factoring set up, it grows with you. So if you send in that invoice or you send in that contract, I'll bump up somebody's line right there on the spot. And that makes a big difference. It helps you run your business. And I look at it almost as like a partnership, because the more they factor, the more work they're doing, the more they're growing. And hey, we're participating in that too. And there's nothing wrong with that.
Well, now you're in the equipment space too, so like you're advising them. You're kind of their go-to advisor, pretty much, in their in-house
Well,
CFO, pretty much, right?
yeah, that's actually a pretty accurate statement. So I'll give you a rundown. I own Integrated Factors,
Mm-hmm.
and that's just a factoring company. But prior to that, I've had integrated business financing for the last 5 years. And prior to that, it was called a company called Sprout Lending.
Mm-hmm.
And we are a marketplace, but we don't act and work like a bank. What we do is we actually do high-end consulting. So somebody comes in and they say, hey, this is what I'm looking to accomplish. This is how much I need. I say, great. Here's the documents I need. This is what I think we're going to wind up doing. Please send everything in to us right away. They get everything back to us. We actually put it through the same softwares that the banks use. Okay. We analyze all their cash flows. We do a soft credit pull, both on personal and business. And then guess what? We put it into a cash flow sheet. And I apologize. I should have had a dummy one ready, I'm not going to show one here on the name. I'll send you it after so you can maybe put it in the show notes. But basically, we show them their personal credit, their business credit, and all their cash flows. And then we have a high level strategy call with them to figure out what's the best way to accomplish their goals. What program is it? Is it project financing? Do they need equipment financing? Is it an SBA loan? Is it a line of credit? Is it invoice factoring? You name it, we carry it. And I've built the best relationships with my underwriters and my banks because I've been doing it 15 years. And so then we go and we work on bringing them back the best options. We don't just go to one spot. We bring them back a bunch of options, explain them, and then we help them get it done. And by the way, we don't charge for this. Okay. There's only two programs that we charge for. One is SBA loans, and two is term loans. And that's because the banks won't pay us because they hate that we do it.
Mm-hmm.
And term loans, and this is a little great hack. Okay. If any of you guys listening have like cash advances or any type of predatory lending, and you have a good credit score and you're paying yourself, we can get you out of that. And how we do that is usually a couple different ways. One, term loans, they only go off your provable income
Mm-hmm.
and your credit. And it's a 3 to 5 year loan, simple interest. Okay. We use that to pay off the cash advances. Then we can use any type of collateral. So if you have equipment, and you know this, we do a sale lease back on the equipment, pay off the predatory crap. If there's
Mm-hmm.
anything left over and you have good AR, we'll do invoice factoring and pay off the rest. And now you're not waiting and you don't have daily or weekly bullshit payments in there anymore. And I can't tell you how many people in this space, because most people in the finance space, and I know you're going to back this up, are absolute fucking criminals, right?
Yep.
They are criminals. And
The banks
right.
included. Like the banks are fucking.
Yes. Well, banks don't carry factoring, right? Banks usually they don't have all the scope of programs, and so they're going to sell you what they have and what they're comfortable with.
They're gonna make you fit in the box if it fits in the box. That's it.
Exactly.
Otherwise, it's like good
Exactly.
luck.
Yeah. Or they turn you away. And by
Well,
the
even
way,
what
they
you're
don't.
describing is what the bank should be, right? Like how they should be there as you need increases mid-year, they grow with you. And the bank trained a lot of people. They trained me like that, to be that kind of go-to, not kind of be the go-to advisor. So
Yeah.
now when they're going to make a machinery purchase, they're going to make a land purchase, they're going to make a big decision in their business. You're the first guy they call because you bring that value. Um, so yeah, that's how it should be, but it's not how it is now. And the reason why I left that space in general is the quality of the people that they were able, because they have so much turnover and employee issues like everybody else. They hire just dummies.
Yeah.
So it's like Russian roulette that you go in the bank and you're forced, because as soon as somebody talks to you, it's like a pissing contest, right? They fucking
Yeah.
went on the CRM, they put your name down, and that's it. Nobody can touch you, right? Like it's like you're that guy, you're married to that guy, and if that guy's not competent, you're fucked with that whole institution, right?
Uh-huh. Yeah.
And I see that
I
happen all
see
the
it in
time.
Chase.
So that's why I started my brokering business, which is, like how yours is. And I did that for many years in helping, people structure their corporate finance without being tied to the bank. So yeah, I get it 100%. The bank's not the same way anymore. So you got to think outside the box. You got to look at other options. You got to look at other lending facilities. And me, like, man, I think I'm pretty knowledgeable of this stuff, but I'm still learning it. And for instance, you told me today we were talking about factoring, and I was talking to my friend Sheldon last night about taking on bigger projects and how factoring kind of helps like that. But you mentioned project financing, which I think is a unique product that can be, especially if you can get the timing down, and the developers stick by construction schedules, could be actually be cheaper than factoring and make more sense for a lot of people. So maybe we can talk about that.
Yeah, absolutely. So project financing is a great program. The company I work with, he actually lives 8 miles away from me. His office is 8 miles away. He's a good friend. His name's Scott. And so, long story short, he was in that space, and it's also it's also for the B2B space too.
Hmm.
So a lot of times when you're doing well, you always want to bid on larger projects, but sometimes it's a little bit hard to finance them. And so what project financing does
Well, it's not only
is,
that, because the way I did an episode about the construction draws. So you probably know that when they submit their invoices, then it goes to the bank, and they have to send the quantity surveyor to come check the progress, see the cost to complete matches, and then they release funds. So the developer is not paying 9.5 times out of 10, they're not going to front that payment until they get paid.
No,
So
no.
you end up floating it yourself, right? So that
Yeah,
scares the shit out of people because that could be like $1 million a month, right?
yeah. Well, you're turning into the bank and you're not getting paid for it, and you
And
have
so
all the
where's that
risk.
money going to come from?
Yeah, exactly.
Yeah.
So so what project financing does, I mean, he figured this out. It's genius. If you have $1 million contract, they'll let you draw up to 25% of it. And so what the way it works is you get charged only on what you draw. You're charged 5% per 30 days on what you drew. So
Okay.
if you have $1 million contract and you
So
only
kind of
need
like a line of
200,
credit then in that sense, right?
similar, except this is you can do, and this is I love this part of it. After you usually do your first or second deal with them, and there's a level of familiarity, you can do it because it's only based on that one project. You can
Hmm.
actually do it on multiple projects at once. So if you need to really start and you have the ability and the skill, I'm saying ability and skill because there is a certain type of operator that can run 10, 20 big jobs at once. Not everyone can do that. But what he'll do is you can put in the cash flow sheet and it's just project by project. So get 25 up to 25%. In the example I'm giving you, $1 million project, you only need 200K. Let's just say you get your first draw in 30 days. Well, you draw the 200, it's 5%, so it's going to cost you only 10 grand.
Hmm.
When you get that first draw, which is usually around 30%, right? So if you get a $300,000 payment in there, it's in goes into an IOTA account. They take out the draw, so they take out the 200, they take out the $10,000 fee. They send you the rest, which is 90,000, and now you're running the rest of the project, right? And so it's just contract by contract. And I got to tell you, he's grown so fast because nobody else is doing this.
No, I've
And
never
it's,
heard of it. That's what I'm saying. Like
yeah,
even I know through the broker channels, even outside of the banks, that I've never heard of this.
well, you and I both know that not every broker is a good broker, right? There's some great brokers out
Really?
there.
Are you sure about that?
But here's the reality. Most of the places I work with and have the best relationships with, they don't accept brokers. I met them the same way I met you. Somebody said, "Hey, this guy really cares about people. He does good business. Want you to meet him." I said, "Look, I'd love to add that. You take brokers?" They're like, "No," but I'm like, "Hey, just give me a shot. Let me show you that I'm not going to stick you with some bad debt, and I'm going to give you good volume." And that we do it, and guess what? Everybody wins. The clients win most, and that's one of my core values: win, win, win. Client has to win. My partner has to win. We have to win. And if you don't do business that way, you won't have a business very long.
No, this is there for a good time, not a long time, right?
Yeah,
You see that often. So
like
no,
e-com.
that's not common. No.
Yeah, yeah. And so I love that we have a similar background, right? A lot of I think the broker space, it's become saturated, but I also think there's an ability to really help people and impact people if done the right way. And honestly, it's one of those things. That's why I wanted to actually start financing some of the products myself, because I wanted a little bit more control than just dealing with an underwriter. That's
For sure. And again, so like that's how in the finance world, that's how funds are started, right? So somebody that has that background can underwrite it, then you get somebody and they'll bank you for being able to build a portfolio based around what you're doing. And I think that if you're coming in to do project financing and you're trying to build a portfolio for that, that's probably not a bad thing for the market to do that and get that expanded,
yeah,
because of how much value it can bring to the customer. But not only that, it goes back to that butterfly effect and trickle down. Like now, if you're getting these contractors to be able to have that ability to finance and get these projects and be able to take them on, um, that's going to make things get done faster and for better
yeah,
prices, and it makes a big difference in the economy, right?
yeah. Because they're doing more jobs, they're not laying out their capital, and like I think the biggest place that the trades get sideways is getting the wrong capital stack, right?
Yeah.
So let's say you go to somebody that says they're a marketplace, but really they're just pitching MCAs.
Yeah, which is
You,
everybody
you
pretty much.
which is everybody. And look, I'm not gonna lie, we have them, but I tell people all the time, hey, this is the worst of the worst, and I only work with the better companies and best companies. And if it doesn't make sense, I'll tell them. And that's for people that, hey, they can't get out of the way of their own credit, right?
Yeah.
But
Yeah.
what'll happen is maybe they borrow 200 from them. Well, guess what? That 200 that you just borrowed, you're probably paying back a nice chunk of that in the first 30 days. And so that's stressing your cash flow out. And like I said, not having the right capital stack, it just is a spiral effect because now you're borrowing more money and you're robbing Peter to pay Paul. You don't know when your next check is coming in. And I've seen it so many times where these guys panic. Oh, listen, project financing takes about 2 weeks to get set up. Factoring, can I get you a term sheet in 24 to 48 hours? Yes. But you and I both know it takes time to get set up. Equipment financing, how we
That's
met.
the biggest hurdle is like even for banking, is collecting the documents, as a
Yeah.
broker, right? That's the biggest.
Yeah.
So so for anybody listening, like do it once, right? Even now, like I'm sure as an advisor like yourself, once they've done it that one time, you're keeping those files, you're helping them update it, which is a lot less cumbersome than doing it the first time. And then you can always year by year, you're like, you make it a process that, okay, once I do my financial statements, I'm going to send them to all my finance guys, like my banker, or I'm going to send it to Jonathan, whoever I'm working with, so that now I'm prepared now for the year financially for what I need and blah, blah, forecasting, which you do not see in this industry. You don't see guys, nobody's there to really teach them, right?
Yeah. Well, that's why we do the strategy session, right? And I will tell you this, the top 3 things that I refer out to my clients, okay? And this is all clients, but it is very prevalent in the blue collar space. Bookkeeping. All right. So
Absolutely.
my bookkeeper is a close friend of mine and he does all my companies. He does them outstanding. He's way underpriced. Okay.
Mm-hmm.
And so I refer him a ton of business. Credit repair. Okay. Cause that is another industry that is absolute dog shit and a lot of scams. I
Yep,
have people
for
that
sure.
actually do it. And then business credit. Okay. And I can't tell you, people don't understand that business credit, yes, it's a thing. You have a
Mm-hmm.
paydex score, you have a Dun and Bradstreet number. You can get better terms from your suppliers, from your vendors, if you can show that your business actually has a credit score and you pay your bills. Why wouldn't you want the ability to float stuff 30 days, 60 days, 90 days? Because guess what? Everybody you work for is making you guys do that. So why don't you
Yeah,
flip the table and do it the other way? And by the way, it's so much easier for me to work with you when you have a high credit score, you have a great business credit, and you understand your cash flows. And when I ask you for financials and an accurate AR report, you can actually send that in,
for sure.
you know? So I
and
don't look at it
and
like
how
I'm a,
common is that? Like, be honest, how common is it that you can, when you're first meeting a client, that they can say, hey, yeah, I'll have interim statements.
if I'm guessing, about 30%.
Yeah, that's not a lot, right? It's a lot less than you would think,
Yeah.
right? And
Yeah.
then how many are running projections on their business, on their
Oh
forecasting
man,
financial?
that's all that's almost nobody. Almost nobody. It's actually what I talk about that on my show.
Hmm.
Like, how do you guys know how you're going to do this? And,
How are you
why aren't
measuring
you
your success and where you're at?
Yeah. Why aren't you nervous that your AP is now ahead of your AR? Do you guys know what that means? That means that you're going to be in for a very rocky season unless you figure that out.
For sure. And so that's again why I wanted to, one of the main reasons I wanted to have this podcast is to have those conversations so that people can understand it, and
Yeah.
know that there's people that you can reach out to that will help you, because they're not very prevalent and very common. So, if we can bring that value to the customers and say, hey, talk to Jonathan, then man, we've won on what we're trying to achieve for sure, right? So what would you tell what do you tell your client, customers now about what you need from them, and in order for you to be able to do your job to succeed and make sure that they have everything they need?
That's a great question. It's really going to depend on the program, right?
Hmm.
I'm not going to include SBA loans in this because that's obviously a totally different set of
Beast.
documents.
Mm.
Yeah. For the most part, 6 months of banks, aging AR report, aging AP report, year-to-date financials, prior year-end financials. And anytime we're mentioning financials, it's always a profit and loss with a balance sheet that corresponds to it.
Hmm.
Most recent business tax return, sometimes I'll ask for two. If we're doing anything that's AR based, I want to see a top 10 client list. And that allows us to check out your clients without them knowing and making sure that you're working for people that are actually going to pay you. Right. I think that's one of the biggest benefits of factoring is it helps people not work for companies that aren't going to pay or that are going to pay them very slow because we are taking a look at their business credit. If it's equipment based, I need a copy of the invoice. And if it's titled, I just need a copy of the title. Otherwise, that's pretty much it. And a driver's license and a voided check. And then what we do from there, like I said, we put it all into the same softwares. We spit it out. I email you, and literally it just says, hey, well, it's not always me, right? Like I have a full team, but the reality is somebody on my team will most likely just email you and say, just shoot me a text when you're available to review this. We review it. We give them the good, the bad, and the ugly. We make suggestions. We might make some introductions to fix a couple things. And then we go to work on bringing everybody back options. It's really
Yeah,
that
and
straightforward.
to your testament, so one of the common people we had was Jeb, and so Jeb actually found you through Josiah, who Josiah was telling me that he told me originally, he's like, yeah, he, when he went to go work on a deal for work on Jeb's machine, he told Jeb, and Jeb, to his credit, is a really aggressive guy about doing the things that need to be done, that he doesn't want to do or nobody wants to do. And that is like one of these things is cleaning up all your financing and credit and all that stuff. And so when we met Jeb, he wasn't able to get financing for a larger amount of purchase, but we ended up, pounding the pavement, talking to different people, talking to different brokers, and we got him in with his foot in the door. Not easily, I'd say, but it took a lot of work. But now, now we sent him an invoice and you got it issued right away. And I think we're going to be slower on actually getting it on a truck and get it out to him than you were for getting it approved and think, yeah, 100%. So that's a big testament to you, because I don't see that a lot in the industry and people bringing this kind of value. And again, I'm talking to people every day in all over North America, every spot of Canada and the United States. And again, I'm not hearing that they got a guy like you. So I really like what you're doing. And that's why I thought it was really important that we had this conversation because, back to what you're saying, your bookkeeper, how important that is. And then your accountant, obviously, and knowing the difference between the two, that's a big important thing too,
Yeah.
right? I'm sure you know that a lot of people don't say, I got an accountant. And it's like, no, that's a bookkeeper, right?
Yeah. Yeah. He's not, listen, if your bookkeeper, if your accountant is not discussing how to save money, how to structure finance deals, right? Like quick and easy one. And I know you know this, so it's kind of silly and redundant, but some of your listeners might not.
Mhm.
If you get an equipment loan or you do a lease with $1 buyout, it is the same exact cost. There's no
Yeah.
difference in cost. The difference is how much you can write off. And the easiest way to explain it is if you do the loan, you're going to be able to write off whatever the interest is, and then you can depreciate the asset. That depreciation usually only takes place in that first year,
Mhm.
right?
Majority of it, yeah.
Majority, right? But if you get a lease with $1 buyout, again, same cost, but you can write off the entirety of that lease payment over 5 years, which is much more. And if you are an asset heavy business, if you always need equipment and you schedule it out, so you buy one piece a quarter, guess what? You are constantly layering and layering and layering your write offs. And you know what? That's really easy for me to explain if you need an SBA loan why you're not paying, why your profit margins aren't high because you can just kick that out, add it back. I mean, but it's how you structure things. And
I know
most people don't.
the funniest thing is when you probably get too is like you get the customer says, I don't use those loans. I buy everything cash, like a big pride statement. I'm like, you're not very smart, sir. Do you understand write-offs and amortization and depreciation and how they can affect your bottom line?
Why use your cash? Why? Think
Yeah,
about
and you're parking how much cash there. It's not a dick measuring contest. Let's put it that way, right? Like smart
but they
finances,
think
it
it
shouldn't be
is.
that way. Well,
They
it is
think
to
it
them,
is.
yeah.
Yeah, but here's the reality of it, right? When you're using your own cash, you're not using that cash for growth, and you're
No.
tying it up, and then God forbid
It's
something were to
opportunity
happen to your
cost.
business.
It's opportunity
Yes.
cost, economics principle. What could you have done with the cash for something else?
Yeah.
How could you have used that cash exponentially to make more cash? as
Yeah,
opposed to parking it in that one machine. And
exactly.
if you're a smart businessman that you want to measure your dick by on that, then you probably have other businesses or other stuff you could put that cash into that give you at least a 10% return or something like
Yeah,
that, right? So
yeah, you're right. Think about what the finance cost is, right? If you were
100%.
gonna do that, that's your cost. And now what is your average return on marketing? What is your average return on an employee? You can map this out. It's just math. It's numbers, right?
Mhm.
And so the reality is if you're spending money on marketing and you're getting, let's say, a 3-to-1 ROAS, return on ad spend, okay? And you think you're a brilliant guy by not marketing more and using your equipment to pay cash, well, guess what? Yes, is that equipment gonna be slightly cheaper? It is. But you know what? You could have been making 3-to-1 on your ads, have the cash, and by the way, you would have net more profit at the end of this because one, you're bringing in more revenue, and now two, you have more deductions at the end of the year. But you could sit there all day long and say, "Hey, I bought it cash. Cool. Congratulations." I love that you brought that up.
No, just to simplify that for a second too, because again, a lot of people me and you talk like this, and it might go over a lot of people's heads. When we're talking about amortization and depreciation, that's like these are intangibles, right? They're essentially made up expenses that reduce your taxable income. So you buy something cash, great. You're not creating that amortization, depreciation, and interest expense. Well, you still have your depreciation. I'm sure you have the way you can write off some of it, but you're not creating the amortization and the interest expense from it. From that, what could you have been, doing with that money?
Investing.
Well, yeah, exactly. But then, what on your bottom line, you had all this net profit. Let's say 100,000 net profit, you're going to pay 20%, whatever. Let's say your income tax is 20%. So instead of paying 20% on $100,000, if you had not bought that cash and financed it, you probably created 30, 40, $50,000 in intangibles, like I'm saying, made up expense, which is your interest, your amortization, that reduced that now. And now your net income is not 100, it's this much.
Yeah,
So how much money did that exponentially save you? That's what we mean about writing it off and interest and all those things, how they're intangibles, which means they're non-existent expense. They only exist on your income statement,
exactly. 100%, man. This is
right?
fun.
Right. Well,
This
again,
is
this is the conversations that people don't usually have
yeah.
in the dirt world, right? In
And
the industry. Like
yeah,
even
I mean,
Aaron Witt, to his credit, he does a lot for the industry about educating people about going into the new generation. But I don't even think he has that skill set to um, to be able to educate people on that. And I'm sure he'll bring people in to do that. But maybe you bring us. We'd be happy to do that.
yeah, we'll do that. But
Right?
and then think about it. That one example, right?
Yeah.
So if you had the 50K in intangibles, you literally cut your tax bill from 20,000 to 10,000. Go a step further. If that piece of equipment was 100,000,
Hmm.
right? And you could invest that equipment, I mean, you can invest that capital somewhere else that you're going to get a 25% return. Well, guess what? You just made an extra $25,000 that year
Hmm.
and you paid $10,000 less in taxes. So that is a net swing of $35,000 to your bottom line. It's really that simple. And like, I don't know this because I mean, I know it because I'm a finance guy, but I'm also an operator. And you need to be able to understand this, or better yet, have somebody that understands it, that you trust, that you can work with. It doesn't have to be me. I'd
Hmm.
like it to be me, but it doesn't have to be. Right?
Hmm.
Get someone you know, you like, you trust that understands it, and you'll make a lot more money and you will grow exponentially. Right? Like I like to over deliver because that's like here's the reality of my business. My business, I have to compete with the big banks. Right? I have to compete with um, just everybody, like a lot of marketing companies, and so there's no way like the ad spend and how much it costs to market in my business. It
Hmm.
is very prohibitive. So the way we treat everybody here is you turn one client into two. How do you do that? You over deliver. And guys, by the way, I'm not saying this to brag. I'm giving you a business model that will help anybody grow.
No, it's
Okay.
just simple. Like the best salesman doesn't tell you how do I sell this to you today, is how do I sell you the next one, right? And that's what you're trying to do, is like not how do I finance this guy and get this business for this transaction. It's like how do I get all the transactions, and
Yes.
this experience is going to dictate.
Yeah. think about it. Anybody you've ever spoken highly of, why did you speak highly of them? Because you
Because
went
they
in there.
sold me emotions, not a product.
Yep, you went in there with expectations. They greatly exceeded those expectations, and you got more value out of that than the amount of money you paid. Okay,
I try to
and
live by
that's
that,
how you
the
build
whole
fans.
philosophy.
Yeah, I know. That's why we get along so well, brother. I can't.
Well,
And knowing how similar our paths are, I'm shocked
for
that we
sure.
haven't crossed them.
We're both hockey burnouts.
Yeah, exactly. Hockey burnouts.
Um,
But
no, but back to what you were saying about how the write-offs and finance the equipment, right? I get that 100%. So what I try to do with fully equipped machinery is turn that even more upside down. Is like, okay, you you understand how this works, and you with the dealership models and going and financing it and buying it from them. But then now, what if I'm giving you that whole machinery, everything below market cost? So now, are you able to make those write-offs on it? You can use your equipment line at the end of the job or end of the year, go sell it for more. And what did you create? A capital gain out of it too, right? Now you're really like you're getting Jedi level type stuff, right? And that's
yeah,
what I wanted to bring that value to customers, because it's fucking ridiculous how much this shit costs now. And without any rhyme or reason, not based on manufacturing costs, not based on anything other than we
agreed.
can,
Yeah,
right?
agreed.
And you have no other options. So that's why, again, like I want to take it and educate customers like this. And again, if you, man, by all means, if you want to go spend double, triple the cost for the same amount, same type of machinery and the same exact product, go ahead and do that. But if you want something better and you want to be able to like really be competitive with your business, then man, you got to give us a serious look at what we offer, because we can make that difference. Like I can guarantee you results, right?
I wanna
Money back
say,
guarantee.
yeah, I wanna tell you how it came about, right? So, I'm not gonna say which client,
Mhm.
okay? But one of the clients that we have that we share, um, great guy, he called me up because that wasn't the first thing I did for him, right? I was setting up the invoice factoring. He goes, "Dude, I need to get this machine and I need it right away." I said, "Okay, bro, what's going on? Why do you need it so quick?" He can't fucking sell it to anybody else. I don't want him to sell it to anybody else. I'm like, "Dude, stop panicking. I'll handle it. Just send me the invoice and what I asked you for." Sends it over. I'm telling you, within inside of 60 seconds. And I'm like, "Why are you in such a panic?" He goes, "The piece, the attachment that is on the vehicle is almost, if not the same cost as what he's selling the whole unit for." And he's like, "I think he's making a mistake, but even if he's not, he comes highly recommended, and I need this piece of equipment." I'm like, "Dude, I got you." And it was one of the clients that I financed for you. That just goes to show you that the model works, okay? He was banging down my door. I'm sure that if I looked at my call logs and then I had you pull up your cell phone and look up your call logs,
He called me
I'm
just as
sure it was
often,
like a
yeah.
60-second difference.
Yeah, but and so even with we were talking about, like we've had it where machines have come with like significant upgrades. Like that one is probably in line with the other one he got from us too, in terms of value of what came as a surprise to us, in terms of what came with it. And we did not raise the price $1 on either. And from that, if you combine the two, is probably 100 and something $1,000 in value, and that's off like not a lot, like a machine and like two machines, right? Like that's a lot, right? But we could have, and that goes back to the industry. Any other person, and a half people out of 10 in this industry, you're gonna be like, Raj, you're a fucking idiot. Why didn't
Yeah,
you, charge more for that or this and that? I'm like, goes against my principles, my friend. And
yeah.
again, that's why people think I'm full of shit, right?
You are not,
Because
and
how could that be? He's up to something, right?
I wanna say one other thing. I'm not gonna get into specifics, but when we first spoke last week, Raj showed me something, okay? And my jaw hit the floor, and I'm like, "This guy is full of shit." I did. I thought you were full of it. It blew my mind. And then when you actually showed me
Mhm.
the back end and it was true, I was like, it completely changed my view of everything. That's all I'm gonna say. It completely changed my view. So, guys, if you're listening to this, work with people that actually give a shit about you, right? That are going to be in your corner and build relationships with them. All right. Because I gotta tell you, we spoke I know it sounds like me and Raj have known each other forever. This is the third time we're actually communicating, and one of those
Hmm.
times was over text. But
Hmm.
our values align so much that we're going to be doing business together for years and years and years. And I hope you come down to Florida to hang out, and I'll
Well,
take you
I'll be
out
there.
on yeah, do it, Tampa. Let's go.
100%. We're
Okay.
going to be in Florida this whole winter because again, we're expanding out there. We're in Texas next week, getting things set up there, and then next stop is Florida. So we'll be there. We'll probably be in Orlando or close by that way. We'll see, but still close enough to you guys. So yeah, we're looking forward to it. And I definitely agree with you that we're going to do a lot of cool stuff for sure. Um, Super excited about it for sure. But back to what you were saying about the industry and opening people's eyes. One of the definitions of humility is to remain teachable. So I seen some of the brokest people I know in the world are they know everything, right? You can't tell them anything different, and they know and yada yada. So if you keep your eyes open and your ears open, again, there's a lot of bullshit, but still give people the benefit of the doubt and hear them out just to give them that time. You might learn something, right? And that's how I came to know a lot about supply chains and where things are manufactured and where kind of those bodies are buried. But yeah, a testament to you, that you opened your horizons and you said like, hey, let me look into this, right? Because other people, again, just like in the machinery, they just said, no, he's full of shit, and that was it, right? They never gave us the time to give us the benefit of the doubt. So I appreciate that.
Always be learning, man. I love it. If someone can teach me something, I'm hooked. Teach me more. You
You
know?
can learn you can learn something even and especially from a dumbass, and that's
Yes.
what not to do, right? So
Yep.
always remain teachable.
I love it, man. I love it.
But well, I guess we could leave it on that today. But I think we brought a lot of value, and we're definitely going to do this again, if not multiple times, and maybe even bring a third guy on the mix, and we'll have some good conversations. I think this was great, and as well, I want you to give us another plug on all your companies and any of our guys. If you want to reach out to Jonathan, I'm going to put all his information, everything into our a link for the post and everything. So feel free to reach out to him directly. He's a wealth of knowledge, and I'm super happy to have him in our network in the fully equipped family.
Thank you. I appreciate it, Raj. Thanks for having me, and get down to Florida quick because I wanna meet you. I wanna take you out on the boat.
Yes, sir. And again, don't forget your plug your company. So tell everybody how to get a hold of you and what
Sure.
your platforms are and everything. Yeah.
So my marketplace is integrated business financing, and my factoring company is Integrated Factors. So just look up Jonathan Fodera on any social platform or go to integratedbusinessfinancing.com or integratedfactors.com. You can reach us any which way. And what I'm going to do just for this show, Raj, I'm going to send you my calendar link, and you can actually plug that in here, and I'll give you my personal email. Just because if anybody's listening to this, I know they're educated and I know they got the right thought process, and I'd love to work with you.
That's awesome. I can't wait to do some more collaborations in the future. And I appreciate you giving your time today.
Absolutely. Thank you, bud.
Cheers.